Worldwide markets this week, JSE returns over the last 10 years. All the individual stocks, it's mostly all about miners, but there are some other notable winners. We've got Nvidia results, Harmony goes big on copper, and a little SA Inc. stock that when GDP returns could be doing great. I'm Simon Brown. This is Worldwide Markets, episode 658 for 26 November, recorded Tuesday 25th around midday. Worldwide Markets, powered by Standard Bank Global Markets, Retail and Shyft, the global money app that puts travel, shopping, payments and investments in the palm of your hand. Enjoy the cheapest forex rates anytime, anywhere. Shyft, powered by Standard Bank. Thanks to Shyft, thanks to Standard Bank. Let's kick off with some results coming through locally. We had Invicta numbers out on Monday. They do capital equipment, mostly South Africa. They've got some Europe, some US, some Asia, shipping out of China. So that hurts in terms of their tariffs because, of course, some of it ships into America. But by and large, one of those little companies that, trading on a PE of under 5, a dividend yield of over 3, a price to book of 0.7. In other words, really just by all metrics, a cheap looking stock. The challenge they, of course, have is a lack of GDP growth in South Africa. They did very well in terms of getting the mining business they do in mining, but manufacturing really is their biggie. Now, the stock's up a bit over the last year or so, trading at 37.50. But if we start getting that 1.8 the minister promises us, and then up to 2 and 2.5 and 3% GDP, this is one of those stocks that's going to be an absolute winner. It is incredibly well positioned for that recovery in SA Inc. It needs to happen first. We need to positively see it. They do have one slight benefit in that they so aftermarket. So if you are a manufacturer and you're sweating your asset, you don't want to replace that machine. So you're buying more parts, and that certainly helping. We had Prosus results out as well. Prosus, Tencent, Naspers, of course, that's stable. Good set of numbers from Prosus. What we're seeing is positive cash flow for the first time ever. And to be clear, increased to 59 million for the 6 months ending September, compared to negative cash flow of 104 million in the previous period. And this is excluding the dividend from Tencent. They're also sitting on a couple of $1 billion of cash. This is, we know all about Prosus and Tencent. We absolutely do. But they've got their food delivery, iFood and others. That is starting to really, really gain traction. And I was actually at a dinner with them on Monday evening, and they're talking around how they are managing to get to that place where it's a single super app. Much like WeChat in China, the idea is you do everything in that one. You order your Uber food or your Uber vehicle delivery. And it might not be Uber, depends on the markets that you're in. But certainly they are gaining some good traction. Now, they are still a long, long way from not being all about Tencent. Tencent remains the big story here, but it's moving in the right direction and moving quite quickly. I mean, I don't know if they're ever not Tencent, unless they unbundle the Tencent stake. But of course, they like the dividends from that. They're also doing a share buyback. They sold Tencent into Hong Kong, and then they buy back shares in Amsterdam and Johannesburg, where Prosus is listed, ditto with Naspers. And that certainly is kind of helping to narrow that significant discount. But if you want China exposure, then this is absolutely one of those places to get, I think, some actually fairly good China exposure. Tencent is a giant, and Tencent is more than just WeChat. There's Tencent Music, there's the online adverts, there's Tencent Games, they've got a stake in Epic Games, and so that list goes on. They've got their sort of competitor to TikTok. Now, in China, TikTok is called something else, I forget what, and then there's a Tencent competitor to that as well. So a lot more than just saying, well, hey, it's Tencent is that WeChat. It is WeChat, but there's a lot more than just WeChat. We also got latest news out of Nvidia, the results came through on Wednesday evening after market close in the US. All in all, the results on the surface were not bad. It's Nvidia. We expect a lot from them, and they delivered in terms of what we expected in terms of results. They beat on revenue, they beat on profits, they beat on all the things that matter. Their forecasts were beating, and it was weird because on Wednesday last week, or Thursday, which was the day after, so it had been trading pre-market after the close on Wednesday, about 5% higher, opened about 3% up, and then closed down, which was just like completely wild and woolly. People started to dig into the numbers. I mean, one of the things that they talked the big story, but we discovered that actually inventories, for example, were up 32%. Now, that just makes no sense. If there's huge demand for your chips, then why? More news out last night that I think it's Meta wants to use one of the Google chips for their data centers. And certainly Amazon's got chips, Google's got chips. The challenge with those other chips is that they're not the grasshoppers. They are sort of B grade. Now, B grade is great, but you get slow performance and higher power consumption. So there are challenges in that regard. I still hold Nvidia. The 180-ish level is a support. If that fails to hold, 166-ish is your next sort of support. And then we're down to the 150s. We'll see how it plays. The debate to a degree has shifted. If we think back to earlier in the year, the conversation was, are they in a bubble? And now the conversation seems to be, yes, they are. And you'll remember that I spoke about this last week and I said, well, that's cool. And we had the chap from Citibank who was, here is how you look for if it's a bubble or not. When of the Mag 7, when two of them are trading below their 200-day moving averages, then you are in trouble. And as it stands, Meta is the only one of the 7 below their 200-day moving average. It's actually moved up. It's only 10% below. Microsoft is close at 1.5% below and Amazon at 5% below. But using that simple methodology, we're in bubble. But you know what? You want to own bubbles because they go higher, and you don't want to be selling a bubble just yet. You want to be hanging on to it because, well, bubbles make us money. And then some other news. Harmony, who bought the Mac Copper business in Australia, are now going to be expanding their EVA mine as well, or building it out, which is going to get copper for them at about $2.50 per pound. Price is sort of $4.50 to $5 at this point in time. They'll also get some gold out of it. So Harmony is moving away from being a pure play on gold, and they're now going to be copper and gold. And I'm a bit betwixt and between. I chatted with Jimmy Moyaha on my MoneyWeb show on Tuesday morning about it, and he makes the point, you know what, it gives you some nice blend, it gives you some offset, it gives you maybe some sort of base when one's not doing as great as the other or something like that. We'll see how the market responds. I suspect, Harmony's problem is that they're a miner. They need to mine. Gold is getting harder and harder to mine. They've got some of the deepest mines in the world, and they're kind of saying, you know what, guys, maybe we want a little bit less here and kind of keeping it sort of simple in that regard. And fair enough. And you know what, copper, everyone will tell you, copper is the metal of the future. So there's certainly, and to be clear, it's been the metal of the future for some time, but it is highly recyclable, deeply used in all the things that are getting people excited. So copper is certainly having its day in the sun. Our final Power Hour event is coming up on Monday, 8 December. It is Position Your Portfolio for 2026. This, I think, is our 13th year. And we start off with thinking around what happened over the past year versus what I said would happen a year ago. In other words, I mark myself. Here's a fun fact. We had DeepSeek. We had 3 budget attempts. And then we also had the Liberation Day tariffs. And that was all before the 2nd of April. It's been a year. So we look back, I mark myself for last year, and then I look forward to what I'm expecting for 2026. Gold, rand, credit upgrades, AI, SA Inc., offshore destinations, etc., etc. You can attend in person in Rosebank. You can also do the webcast, Rosebank Johannesburg, justonelap.com/events for more information and booking. Standard Bank have a AI structured product, which is, I think, a fairly interesting little beast. I like structured products, T's and C's sometimes, but so this one is currently open. It closes on the 3rd of December, so you've got until next week to make your decision. And what it is they've got two tech-heavy indices: US Tech, which is obviously the NASDAQ, and then they've got China Tech, which is the K-Web. And I hadn't heard of the K-Web before, but it is focusing on China Tech. It's trading in the US. They put these two into the basket, and what they say is that it is auto call. So if at the end of year one, both indices are green, even if they're just green by half a point, if both are green, it automatically will pay you 16%. And then you can roll into the next version of this, but it'll pay you 16% at the end of year one if both indices are green. Doesn't matter how green they are. And say that one of them is not green at the end of year one. At the end of year two, if one of them is green, well, you get 16% times 2 because it's 2 years. And so this goes for 5 years. So potentially, if you've got 4 years where you don't get any green, and then in the 5th year it's green, you get 5 times 16, which is 80%. Yep, my math is right. And you get paid out. There is capital protection. Capital protection is if the indices close no more than 30% down. You get 100% of your money back. Now, I appreciate that this is AI and worries about bubbles and toils and troubles, as I just mentioned. So make no mistake about that. The key thing is 5 years. For these indices to be 30% down in 5 years is, I'm not going to say impossible, but I would say not massively likely. Let's be clear, it is possible. Minimum is 25,000 and thereafter 1,000 per each. You can get it from Standard Online Share Trading. If you don't have an account there, speak to your stockbroker and they can arrange it for you there as well. Closing date, 3 December. So you've got a week. Pretty much you got a week until that is done. And I want to go have a look at the sort of top stocks over the last decade on the JSE. It has been a very strong year in 2025. Make no mistake about that. And we like strong years here. Let's not kid ourselves. Strong years are exactly what we want. But I thought, you know what, investing is all about the long-term returns. So let's go and see what's happened over 10 years. And I tell you what surprised me was that the top is the gold miners. So Harmony Gold Miner, best return, 43.5% over 10 years. That's per year. So 3,600 in total, and an average dividend over the period of 1.1%. That dividend is sitting a lot higher. But Harmony Gold Mining coming out tops. Second is Goldfields at 37% with a 2% dividend yield. Kumba up 33% with a 9.9%. That's giving you 42% over the last decade. And what matters here is the 1-year return for Kumba is minus 1.68%, whereas Goldfields' 1-year return is 140%. Harmony, 68%. Those exclude dividends. So make no mistake, the recent Russian gold has helped, but the miners have actually done fairly well. Exara then pops up next at a 28% and a 12% dividend yield, giving you almost 40%. These miners have performed. Northern Platinum up 28.5%. The dividend yield is only 0.65, so we'll call it 29%. These are phenomenal returns. Over the same period, we probably got the JSE doing 12%. I'll get the JSE number in a moment. Argent. Now, there's your first non-miner. Argent, little business, went off to the UK. Anthony Clark follows it a whole lot. It's done 27% plus a 3 and a bit yield, giving you 30% a year. African Rainbow, Volterra, almost 25% and an almost 5% dividend yield. So 30% a year over a decade. These are phenomenal returns. Impala, 23.5 with a 3% dividend yield. And then Capitec. I wondered where Capitec would be in the list. Up 22.5%, bit stingy in the dividend, 1.6. Let's call that 24% per year. That is a phenomenal return. Your money, excluding dividends, is up 6.5 times. That is absolutely astounding. Bell Equipment, Merafi, Sibanye coming in at 19%. They're saying to me no dividend yield. I'm not sure that's right, but nonetheless, I call that 19 and some change. data tech. Here's the one that lots of these, not, but data tech there at 484% up over the period, which was just over 19%, and a 17% dividend. That's 37% from Little Darker. Combined motor holdings, which I hold, up 19% and a 9% dividend yield, giving you 27% a year. Quantum Foods, Ultron, Signia up 17%. Outsurance, the numbers are fudged because it wasn't always Outsurance. Clicks, 15.9%. Plus some dividend yield, giving you 17%. Naspers is up 15%, but you would have got MultiChoice. PSG, Financial Services, used to be PSG Consult, up 15%. Storage, another one I hold, up almost 15% with a just over 7% dividend yield, which gives you, again, 21%. Lewis, up 14% with an 8.8 dividend yield, giving you, 22%. Advotech, 14% with a 2% dividend yield, giving you 16%. These are strong numbers. Transpacco, they sell plastic bags. If you throw the dividend end up, they're up 20%. Bowler Metcalf, they do shampoo bottles and the like. They're up 23%. Standard Bank is about as boring as you can get. Sorry, Standard Bank, but that is true. And they're up 19% per year on average. These are staggering numbers. Bidvest is up 13 plus dividends. Astral's up 12.8 plus dividends. Robex 12. Barlow World, Santam, Grindrod, Investec. It is, frankly, a bit of a surprising list in terms of how good the returns have been. I mean, there's Little Absa, up 9.3 plus dividends, taking it to 16% a year. As I said, really, really strong returns coming through. Let's go and see some of the boring ones. Itatal, 3.5. Wilson Bailey, 3.8. Mr. Price, 4.2. That certainly surprised me with a dividend yield of 3.7. Caxton, which I've written before, I think is incredibly cheap. Your annual return has been around 8%. Metrofile has given you around 8%. Remgro has given you 7 and some change. Not exciting at all. And now we get to the negatives. Let's go look at the downside ones. We have ICO down 26%. No real surprise. Nampak down 18%. City Lodge 14.5%. These are per year. So City Lodge is down 80% for the period. Arsenal Mittel down 14 and change. 78% down. Aspen down 10, which is per year, which is 67. Sasol down 10%, 65% a year. Cura, even with that takeout, has lost 9 and a bit percent per year, plus some dividends. Baldwin down 7. Famous Brands down 7% a year. PPC down 5 and change. Pick and Pay 5%. Netcare 4.8. Spar 3 and change. Sun International down 25% for the period, including dividend. It's up about 0.5%. Woolies down 22% almost, 2.4% a year. If you add the dividend in, they've given you 1.4%. That is nothing. There really are some, I thought, fairly big surprises that we see here, and I really didn't expect. I mean, some of those numbers are staggering on the positive side, not the sort of numbers that I was expecting. So, what did the top 40 do over that period? That perhaps is the big deal, because that is our benchmark. And over 10 years, the top 40 did 118%. But really, guys, I wanted the CAGR. And the 10-year CAGR for top 40 is 8.2%. Throw dividends in, we get to around 10.5 probably. Those aren't bad numbers by any stretch of imagination. It's been as low as in the crisis, the CAGR had dropped to a 10-year CAGR was 3 point some change. And if we go to the highs of 2019, it was 11.6. But you've made, if you think that over the period inflation, let's say, has averaged 5%, you're getting a real return here of around 7%. Those are proper numbers. Absolutely, those are proper numbers. And I think I was surprised that the gold miners did so good, because my thinking was, well, they've had a really, really good year or so, But they've been sort of eking along, and I think importantly, the last year or so has absolutely fundamentally helped them. And then, Capitec, no surprise there. Advotech, well, I mean, I hold it, so storage, ditto. But some good news, and then some surprises on the downside as well. Let us know in the comments, which ones do you own? Which ones surprised you? Which ones were you like, oh no, I really expected to see that one there? Let us know, have your vote, have your say, and tell us your best over the 10 years. Worldwide Markets, powered by Standard Bank Global Markets, Retail, and Shyft, the global money app that puts travel, shopping, payments, and investments in the palm of your hand. Enjoy the cheapest forex rates anytime, anywhere. Shyft, powered by Standard Bank. Thanks to Shyft, thanks to Standard Bank for sponsoring us. As I said, we'll be back again next week. Next week, we're going to have a gander at what the returns have been, and we'll have a look at what 2025 has been like. It's going to be gold. We know that already, but let's see who else is there. And on the downside, it's going to be SA Retail, the Mr. Prices and the Fishinis of the like. And then, remember, 8 December, our final Power Hour. You can join us either in Rosebank, Johannesburg, or on the webcast, justonelap.com/events. My name is Simon. We'll chat again next week. As always, look after yourself. If you can, look after somebody else as well. Cheers all.